This is our Forex blog for September 12th, 2013, and I'd like to go over what I consider some of the higher probability and safer type of trades. Our currency index shows you as a chart each individual currency, and basically it lets you see what the trend is. It lets you see when trend lines are broken. It lets you see when our upper containment bands and the dollar is hit and therefore likely to go down. The lower containment band is hit and likely to go up. You can see the same thing here in the euro. It bounced, bounced, bounced. The yen ran out of steam above here, pulled back, ran out of steam above here, pulled back. You can see it when a currency is trending up and it's finding support at the hourly. When it finally breaks underneath there, it's very likely to trend down. You can also see previous days and previous weeks value areas. These are where most traders have positions in all of the euro-dollar pairs. And so above that, it tends to want to go up. Below that, everyone who was long and most of the euro pairs yesterday is now losing money and it's likely to go down. It's also likely to bounce off of both the daily point of control and last week's most actively traded price. As you can see, the pound's low here. And of course, everyone always wants me to show off our FX trade signals, which does a pretty good job of finding high probability trades. Most of them are trend based. This one worked, 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 this one failed, this one went up a little bit, this one worked, this one here lost, this one worked, 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 nailed the high, this one worked. It's a very high probability. And I spend about an hour to 3 hours every day going through our FX trade signals and putting in probably 5 to 20 new rules and signals that didn't work that day to either get rid of stupid trades that I wouldn't have taken or to add new trades that the old system didn't pick up. For instance, this one right here. Typically, when a currency is at or below the lower containment bands, it's going to bounce off the upper one. Now, I could teach traders, and experienced traders might pick up some of this stuff. New traders, if I told them there's close to 75 or 80 different patterns that are in here, good luck getting them to sign up for our software. I mean, nobody's going to learn 80 different patterns and be able to spot them in real time. But guess what? The computer can. So when a currency is underneath the lower band, it tends to bounce off the 1.5 upper band, as you can see. The currencies that are underneath the lower 2.0 band here and make a 50% or a 20 plus pip move up tend to bounce off the lower band right here, and especially if it happens to be where our value areas are. So yeah, the value areas, you can start to see the complexity of what I'm doing here and why there's 70 different patterns. If the market is above the point of control, this is the most actively traded price yesterday, so it's a support area, and when it happens to be at or below the lower containment bands, it means yesterday was a big up day and we had a big pullback down, and traders are going to be buying the lows. And so because of that, if we have a swing high bigger than the previous swing high, I'm looking to buy that little dip if the market was 1 or 2 swings ago underneath the lower extreme. These are kind of the ways that I've traded, and it's very hard to teach traders all of these methods. You know, today basically this trade here probably would have been a break even. This one maybe made 5 or 6 pips. This one lost 8 pips. This one made a little bit. This one made a lot. 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 This one made a little. Right? You know, new traders would love to learn all of the methods, but honestly, most traders just want to be told when to buy and when to sell. So guess what? If you take our signals and you combine it with our currency index, you will do better. For instance, let's scroll this back, and you can see that the dollar is above its hourly moving average and the yen's underneath it. Now, my FX signals does not look at that, unfortunately, but we would be looking to sell the euro dollar, and so some signals that it doesn't pick up, you know, here's some of the trades that I would be looking at taking. Anytime a support area is broken, it tends to act as resistance on the way back, but it's also right near the lower band, so I wouldn't recommend this as far as the signal goes, because it's low probability, unless the dollar's looking strong and the yen's weak, which it is on the other charts. I've yet to put that code in there. At some point in the future, this trade might be called. Also, when the market's kind of chopping around near the lows, has a false breakout over the previous high, and then breaks down underneath the low within a few bars, this is a pretty high probability trade I would take on the short side. And it was, one of the bigger and quicker down moves of the day. These are the kind of things that, we look at. But if you're just looking at the charts, when you see the euro having gone from above or below to above the hourly, back down again, and it can't get over the hourly moving average, can't get over yesterday's point of control, this is one heck of a great place to sell. Which currency would you want to trade it against? Well, I would say the yen, because the yen's been trending up. It's pulled back. Ideally, it would be right here at the hourly moving average, a little bit lower. But the euro is a great trade right there, and this will be one example. It's getting a little late today, so I'm not going to spend a whole lot of time on this. We have hundreds of videos for you to watch to see more and more examples, so it's not like I don't provide thousands of examples per year for people who want to do the work and watch the videos. 330 here, it's a very high probability sell, as you can see. The euro is breaking down. It's very likely to reverse a little bit after 330. The 330 right here, the yen is still falling, so we're looking at the chart for a sell. And ideally, you want to wait for when the price breaks the trend line. So a little bit around 330 to 340 is when we start to look at this for sells, and we get in when price confirms it. And you can see it fell from 132, 40, 45, all the way down to 90. Huge move. And even if you would have just got out of this trade when it broke back up here, you would have made 20, 25 pips. And that's really the secret to using our currency indexes. Find a currency that is showing no signs of strength and is starting to show signs of weakness. Wait till it hits a resistance area. When it can't get above it, you have your confirmation when it starts to go down. And remember, you had 30 minutes to wait for this trade, because even though the euro started to fall, it might have been less weak than the yen. The yen needed a little bit more pullback before it went up. As you can see, 30 or 40 minutes, it started to go back up. While this one was kind of going sideways. So if this one's going sideways and the yen's pulling back, you're going to continue to get a currency that's just slowly drifting up. But that's how you trade with the currency indexes. It's super easy, and I'm only showing you 4 of the 8 currencies here, but there's quite a few more. I mean, there's actually the Australian, New Zealand, Swiss, and CAD as well that you can watch and trade.